I'm super happy to hand it over to Anna from Fireblocks. Very quickly about Anna, she's amazing. She is now at Fireblocks for almost 5 years. Before she started her career in finance, but different financial institutions for quite some while. So she is definitely like a big expert in both traditional finance, but also in digital assets. And she will now take you on a journey to what a big bank in Colombia, in South America, is doing with stablecoins. So over to you, Anna. Enjoy.
Thank you very much, Max, for that kind introduction, and thank you for having me on this webinar. So my name is Anna Santillan, and I lead the team covering financial institutions in EMEA for Fireblocks. And in my role, I get to work with a lot of people and a lot of institutions that at the moment are crystallizing their strategy around tokenized cash and cash equivalents. And naturally, that involves a lot of conversations around stablecoins at the moment. Most of you will be familiar with Fireblocks, but for those of you who aren't, Fireblocks is the largest platform to manage digital assets. We are servicing over 2,000 institutional customers, and we cover cryptocurrencies, stable coins, tokenized securities across a variety of use cases. We assist on custody and asset servicing, on smart contract management and token issuance, on payments, orchestration and processing, which is very important at the moment, and then on trading and post-trade settlement use cases. We are an important pillar within the digital assets ecosystem. We are supporting customers that are taking under custody over $100 billion worth of digital assets. We help them process over 3.5 trillion transactions in 2024. We are on track for surpassing 4 trillion in 2025. And we do this across a number of verticals. So we work a lot with banks, with asset managers, with brokers, with market makers and OTC. And part of what we do is help them connect, help them settle transactions in an efficient manner. And one of the things that we will be delving on today is obviously stablecoins, but just a word on what we do with banks. We are working with banks on a variety of digital asset use cases. Cryptocurrency is probably the first one, the one that a lot of people know Fireblocks for. Sorry, I'm going to remove the chat because it is very distracting. So cryptocurrency custody and trading is probably what you're very familiar with for Fireblocks. We are also doing a lot of work on tokenized securities with some of the institutions here. I don't know, for example, BNP or ABN AMRO tokenizing bonds, and a lion's share of the work that we're doing in tokenization at the moment is around the stablecoins. So ANZ issued the first bank stablecoin in Australia last year. Banking Circle launched a MiCA compliant euro pegged stablecoin earlier this year. And we're going to be talking about Bank Colombia and their subsidiary Wenia, because stablecoins have particular use cases and value for emerging market economies. And so, starting with Bank Colombia. Bank Colombia is the incumbent, the largest bank in Colombia. They are the largest bank by number of deposits, by number of loans. They are servicing over 30 million customers. Obviously, Colombia is the fourth largest economy in Latin America, so it is an important country. And Bank Colombia has a team that has been experimenting with digital assets since 2016, 2017. Like many banks, they started with the first pilots on CBDCs in collaboration with the central bank. And those pilots didn't lead into productive use cases. It was a bit too early just then, but they have kept experimenting with blockchain technology. And in May last year, they decided to launch their first productive use case. They launched Wenia, which is a digital-only bank with a license that is actually in Bermuda. And they wanted to compete for a young demographic of investors. I think a lot of conversations that I have in particular with European banks talk about that 0 to 30, 0 to 35-year-old investors, and how to ensure they keep attracting these customers onto their banking platforms. And so what they decided was to launch this application that is offering initially only 8 products, and that those were the largest 5 cryptocurrencies by market cap, a tokenized version of the local currency of Colombian peso, the COPW, USDC, and EURC. And we were talking about utility of stablecoins. For many emerging market investors, the ability to have access to hard currency as an investment vehicle is very interesting, because it helps them hedge against the volatility of the local currency. It also helps them maintain the international purchasing parity. And so for them, accessing Bitcoin is as interesting as accessing USDC or EURC from an investment perspective. And so this has been a very successful value proposition for the younger generation that Bank Colombia is trying to target. Now, how did they actually bring this Wenia application into the market? What did they need? So from a feature and capacity perspective, they needed to have wallets to be able to take custody of clients and their own Nostro treasury assets. They also provided staking capabilities quite from the start. They needed secure governance and access to Web3 for on-chain operations. They needed a tokenization engine to bring this own stablecoin, the Colombian peso stablecoin, to life, and so manage the smart contract and process all the operations. And quite recently, they are exploring as well cross-border payment capabilities. And so Fireblocks help them with all that infrastructure, but also help them with something else. And that is, you need an ecosystem of partners to bring a stablecoin into the market as a bank. In the case of Wenia and Bank Colombia, AWS is their main infrastructure provider. And so joint architectures to help them bring the solution securely into the bank ecosystem, collaborating with Chainalysis as the leading anti-money laundering provider to scan transactions and wallets, and also Notaben as the provider for travel rule implementation. Fireblocks has integrations that are ready to go with all of these providers. And so Bank Colombia and Wenia could focus their efforts on building a great customer journey and developing services to add value to their customers, and at the same time accelerate their time to market by not having to integrate each one of the providers that you need to bring forward for this solution. And so in terms of timeline, 2024 was the solution launch. Since then, they have experienced over 50% month-on-month transaction growth. They have added new assets. They have over 16,000 new users, over 45 that have downloaded the app, and 65 that actually know. If look at the update, and it's over 75 million in transaction volume. So quite a recent launch into a new segment for Bank Colombia, but a very successful one so far. And the next steps for them, and this goes in line with some of the questions that you were asking in the chat, is what are the next steps? In this case, the main rationale for Bank Colombia to embark into this journey was in a way avoiding outflows and defensive, just hedging their position as incumbent in the Colombian banking ecosystem. And the next steps are less defensive and more offensive, looking to generate additional revenue. And so the next steps are incrementally increase the distribution of the Colombian peso stablecoin among their existing domestic ecosystem in Colombia, and so allowing not only the retail users to settle faster cryptocurrency transactions, but also to use that token for settling different transactions with merchants and with corporates. And then further down the line this year, the additional next step is to start exploring international business corridors where they can leverage the Colombian peso stablecoin to facilitate cross-border payments. One of the things that I get asked quite often is, are banks fast enough to compete on this? What is the time frame? What does it take for a bank to issue? And the answer is very politically, it depends. In my experience, we have seen the fastest bank that we work with leveraging, again, an integrated network of partners to bring the project into production. They took 2 months from signature into productive stablecoin hitting the market. We've seen others varying, but at the moment we're working with a global significant bank in the US that is working on their stablecoin strategy, and this has a 6-month pre-production leeway. So it definitely is possible. It makes sense to leverage strategic and integrated partners to accelerate the implementation and go to market, and also ensure that resources are dedicated to building a differentiated offering. A couple of the other questions that were coming up in the chat during the presentation: promising corporate use cases, streamlining on and off ramping, increasing adoption. I think the answers to a lot of this is actually banks need to step into the stablecoin game, and not necessarily every bank needs to issue their own stablecoin. I think that we have probably sufficient that are already in production and being planned. But we need banks to provide wallets so that not only retail customers, but corporate customers can incorporate stablecoins into their daily transaction flows. And that will, in my view, certainly facilitate and accelerate adoption. Thank you for your time. I look forward to any questions, online or offline. I'm very easy to find. You can find me on LinkedIn. My email address is anna@fireblocks.com, and very happy to take questions now or wait for the breakout rooms.
Perfect. Thanks a lot, Anna. There definitely is already one question. It comes from Fiona. He says, Bank Colombia seems to have started small with Wenia. Would you advise every bank to start out small with only a subset of users, or what's the best go-to-market with stablecoins as a bank?
Look, I think from a bank perspective, and in particular for incumbent banks, it does make sense to start with risk and control. And so I tend to advise banks that work with us to start similar, small and with a closed loop ecosystem, because a lot of the different teams within the banks need to get familiar with doing anti-money laundering, with doing operations on chain. And so, yes, even though I think the ambition for stablecoins is indeed to have very open distribution and a very large market cap, the reality is that it is easier to get everybody comfortable with a closed loop, smaller start, and then increase from that base.
And do banks still have the time to start small, or what do you think? Like, where are we currently in this adoption cycle? How fast would you advise banks to move now?
I think we have seen already the early adopters come to market. That is very obvious, and there are already a portion of the market share that has been taken by these early adopters. But I think we are at the cusp of where this could go. At the moment, we are seeing PSPs moving reasonably fast. But when you look at global cross-border capital markets and corporate flows, 70 to 80% of them are actually processed by banks. And so I think the potential is there. We are scratching the surface. And I think everybody needs a strategy and needs to get familiar with blockchain technology and wallets and grow and build the steps from there. But I don't think they are too late.